on the hot seat under the microscope in the spotlight. These CEOs will be closely watched as they work to reinvigorate their companies. Among them, Twitter's Dick Costolo. The stock dropped 44% last year as the firm and Costolo struggled to define its mission and hold on to key managers. Costolo's latest plan calls for strengthening Twitter's core audience, making it easier for users to share content and to gin up some new services to attract new users. The investing world will be watching. Now, January brings a menu revamp at McDonald's as CEO Don Thompson looks to put an end to the firm's declining same-store sales in its biggest market, right here in the U.S. Thompson's at an advantage, or maybe a disadvantage, in that investors will be able to quickly see the results of this new strategy. Yahoo stock up over 128% in 2 years, up 27% in 2014. But critics say CEO Marissa Mayer needs to do more as they credit the stock's gain to Yahoo's hefty stake in Alibaba. Now, Mayer plans to return half of that to shareholders. The question is, what does she do with the rest? And will she be able to revive the firm's ad business, which accounts for about 40% of its revenue? After a flattish year for the stock, sales, and a weak one for profit, Coke's laid out a cost-cutting plan and a strategy for shedding its low-margin bottling business. The question for CEO Muhtar Kent, is this plan enough, and will he execute it fast enough to satisfy investors? Lastly, Ginny Rometty abandoned a 2015 profit target made by her predecessor, instead laying out a plan to reinvigorate last year and this year's, or 2014's, worst-performing Dow component, with a focus on cloud computing, mobility, and security for corporate clients. Again, the speed at which this plan bears fruit, and the question will be, is it enough? That's likely to hover over Big Blue for the rest of the year. And I should say it's 2013, 2014. It was the worst performing Dow component.